And good afternoon, everybody. I'm Michael Filigera from logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, May 20th, 2021. Picture perfect trading today in both the S&P and the NASDAQ. And what I mean by that is that there comes a time when your moving averages will be in alignment. And it can be really good if they're in alignment on the 1, the 2, and the 5 minute. But when that extends out and they're aligned on the 1, the 2, the 5, the 15, the 30, and the hourly, it's bliss. Simply because the market is indicating that we're going in the direction that those moving averages are telling you. And you can see that it kind of kicked in late in the day here with the S&P. Well, kicked in today. The 200 it's a big boat, so it takes a lot longer for that thing to turn. But the other, the 50, the 20, the 4, the 8, all went in alignment with the shorter time frame charts. And what I want to demonstrate is I just want to go, because this is an important point. If you're using moving averages, then this is a good indicator, and you just keep looking on your charts. This one, it took a little bit longer, but the 20, the 4, and the 8 were all right there. And then you just keep going down and you'll see they're all pointing up. And that remained the case for the day. 5 minutes all there. I'm going to go to the 15 minute because I want to just show how this really just took place. These are 15-minute bars. And it really didn't start to sell until noon, basically. 11:45 Eastern to noon. And that only really lasted until about 12:30. So, and then it just rallied again. So by following your charts and realizing that a pullback was necessary, this was a very tradable decline as well. But this move up, when you trade it in accordance with your moving averages, it's like as this was going up on the 15-minute, pullbacks held the 4, and then it moved up again. Pullbacks held the 4, and it moved up. And you can see it rode the 4 all the way up. That is just, you have to believe that this is what they're doing, and the market is telling you, and the moving averages are telling you, and then you just have to trust. So you still don't trade without risk, but you always have to keep a stop in as to where you will take profit, and et cetera, et cetera. But it was a day where you could get long, get out. It would pull back slightly, and you could get back in, you ride it the next, and you ride it the next, and you ride it the next, and it becomes a very, very profitable day, particularly in the S&P, which clips along at $25 a point. So, no, actually, it clips along at $50 a point. So at $50 a point, and you're moving 18, 30, big day, big trading day. And depending on the number of contracts you trade, could have been a huge payday. But now that I've said that, let me go back and let's just review some of this analysis that we went through today. I really wanted to say that because these are the important days that you really want to catch. You really want to be prepared, and you want to recognize it, and you want to jump on board, and you just want to trade it and just be happy and not be concerned about why is it going up, what's going on. It's like none of that can matter. You just really just go with what the market's doing. I don't care why they want to come in and buy it. The fact that they're doing it and I can join the party and make your own money, that's all that matters. So all other things sit to the outside. We'll look at that later. We'll discuss that later because it's happening now. So that's what I mean by trading what's in front of you. It's really important. And that's where you're going to make your money as a day trader. You trade what's in front of you, and you get these moves. It makes up for what happened to a lot of people yesterday. Yesterday was more difficult because it was starts and it was fits and it was juggled around and it stayed in a small range and then it popped. you could end up losing a lot of money. So today's the day that you make that money and you take it to the bank. Okay, what I have done, I've updated the count. But previously I had put the wave B here and was hoping, being this is wave A, was wave B, and we're coming down in the C wave to complete an intermediate fourth wave. Let me just put that up just a little bit so we can see the whole thing. But the market movement, and the market has now told us really what it's doing. And this is A of the B, this is B of B, and now we're in the C of B. And the intensity of the buying, it fits in the nature of the wave. B waves as an entirety, and this whole move is a B wave, it's deceptive. It's just totally deceptive. And in other words, really what's happening is this decline, this is the response to this decline. Oh, this was overdone. There's no more reason to sell. Everybody's buying to get back into positions. And this is the result of that because, oh, nope, too early. Nope, we still got a lot of concerns, et cetera, et cetera. So there is a lot of human interaction, even though it's all algorithmically controlled right now and we're all computerized. But those things, people have to push that button to make a decision. And they're making that based on what their outside input is. So these are human emotions. And that really is what Elliott and Fibonacci measure. They measure how far things can get pushed. What's the mood? What's the reaction to? And then you're going to get a greater determination of how far they're going to push it. So this is a reaction to the A wave. And now the C wave is a reaction to that sell-off going like, no, we were right all along. And now we're going to race back to that level. So it's a race to get these positions on and the intensity of the buying. They basically bought all day. They really did basically bought all day today. Now, we should expect continued upside. I think we measured this out. This is the extensions. If wave C is related to wave A, and the number one comparison relationship is that wave C will be equal in length to wave A. That's right here, 4,205. Well, we got up to, what is that? Almost 4,170. So we're 35 bucks away from that. And the market really at some points was up pretty strongly. So this is very possible to be done tomorrow or maybe Monday. But we're going to let the market do it. There's things we control and there's things we do not control. But I am expecting additional upside. I'd like to see a little bit more of a correction down, but right now this is doing a pretty good job, but maybe it still needs a little bit of a leg down. And so we got the support of the 8-day moving average, and then definitively we got the 200 and the 20 sitting right down below. So I really don't think that it's going to drop all the way down there, but it can. And we need to keep that open and possible. More important will be the structure. So I actually would suspect that this is likely going to happen overnight, or they're just going to continue to take it higher. And this was all we get. We'll let the market tell us, but that should definitely come into play. And that'll really, where's that high? It's just above. So that high may provide need a little bit more oomph to push through, but I don't think it's really going to make a big deal. And then it should be fairly clear sailing. There's going to be resistance again at 49, 4180-ish, 85, 90, 4200. But I think it's going to be on the spill over 4200. Another that push, the stop orders that sit just on the other side of 4200 might just push it up $5-6 more, and then we've reached our target. But we cannot discount that the market may just continue, and this B wave will turn into what we term, and you've heard me say it, an irregular B wave. And that is where it would take out the previous high, or that level, or take out the level of where the fourth wave started. It is possible. We've seen it before in the S&P, in the Dow, in the NASDAQ. All the markets eventually do them, particularly also stocks do them. So that's going to be my first level, but we cannot discount these as coming into play, because they would be the next. If this is exceeded by a lot, these are the next logical places where that B wave will end. In fact, those are numbers that are directly correlated to a larger B wave. So this would be 1.236, 1.382. There you have it. That's our upside. Our downside, if it were to just turn and go down from here, it would be rather disappointing because it's basically leaving an ABC up. And that would take a little bit of interesting that this whole B wave is turning into a nightmare because it's just going to extend out. I don't particularly see that, but we speak about it because it has happened previously. It could happen again. If it does, and it starts to break down from here, these are your levels, and your moving averages will guide you along the way as to how deep. When it starts breaking below that 50 and everything's heading down, then you've got these that come into play. Then we could possibly drop below, and then to complete a C wave down, which I know is still coming. This would be too big of a failure, but stranger things have happened. But I would look for these, excuse me, I would look for these support levels to hold. And initially, my goal is that it's going to get up to this level, complete, and then drop. That's where I'm going to leave it. Our next update will be Sunday. Everybody have a great trading day tomorrow.